Welcome back, traders. Today I will be taking a look at Blusky. Now, I don't know much about this prop firm and they seem relatively new to the prop firm space, so reliability is definitely a concern. But I'm taking a look into them because I noticed they had one of the cheapest true cost of funding when I uploaded my only prop firms video. So make sure you do your own due diligence if you're interested in Blusky, but I'm just going to walk you through their plans and what they have to offer and how they compare to other prop firms. So you can see on their main page, they offer two types of accounts, premium valuations and static valuations. Right now, you can use promo code 2024 in order to get about 20% off. I don't know how long this promo will be available, but most certainly they will have some sort of sale going on. I'll make sure to provide you with any updates in my future videos, so make sure you subscribe so you don't miss that, and I would also appreciate it if you could give this video a like. Okay, so for the static accounts, if you don't know, they have a static drawdown, hence the name. Some other prop firms offer static accounts also, such as Apex, or I even saw My Funded Futures had it on their website for a short time. But Blusky offers a 150K and 200K account, and you can see the numbers here. But I'm going to focus on the premium evaluations, which are the more common prop firm accounts that you're used to seeing with a trailing drawdown. For premium evaluations, you can see they offer a 25K, 50K, and 100K account sizes, and you can see the maximum contract size here for each plan. Now, I'll have all of these numbers in my spreadsheet when we compare, so I'll go over it then, but for now, I just want to go over their trading rules and how you progress to reach your first payout. So no matter which plan you choose, you'll start with the evaluation, and then once you pass the evaluation, you'll move to the earning phase, starting with a Blue Live account. Once you reach the profit goal here, then they'll move you into a brokerage account where you can request payouts. But first things first, let's talk about the evaluation rules and some general information. For the evaluation, you have your four main rules: the trailing drawdown, daily loss limit, consistency, and minimum trading days. The trailing drawdown is intraday, so your highest unrealized equity will be used to trail your maximum drawdown. And of course, you'll fail if you break this rule. The daily loss limit also uses your unrealized equity, but it's compared to your starting balance for the day. So you take your starting balance for the day minus this daily loss limit. That's the amount you cannot drop below intraday. And if you break this rule, you also fail. You have to trade at least 8 days, win or lose, and they have a 30% consistency rule where no more than 30% of your profits can come from a single trading day. They help you out by listing the dollar amounts you should stay under per day in order to comply with this rule. Even if you happen to go over this amount, you won't fail the challenge. You'll just have a higher profit target that you need to reach for. And here in the tooltips, they give you an example on how to calculate that new profit target. However, it doesn't look like they updated the tooltips because they have a new way to calculate this that it's more beneficial to you. But before I leave this page and get into that, I want to show you the fine print here at the bottom. If you hover over refund, it says first month evaluation sign-up fee refunded at brokerage when passing with 25% consistency. So the official consistency rule is 30%, but if you can pass the evaluation with a consistency of 25% or less, then they'll refund you what you paid for the first month in your evaluation when you get to the brokerage account. Now, I don't see anywhere else that they say this, so it's easy to overlook, but if you're able to achieve this and pass in 1 month and get to the brokerage account, you essentially get a funded account without having to pay anything out of pocket, making this potentially the cheapest way to get a funded account. Okay, so now let me show you the new way they calculate profit target if you go over this 30% consistency rule. On their evaluation rules page, number 3 is the consistency rule, and here they have an update. Now, I'm always skeptical when prop firms change their rules. I think to myself, how does the new rule benefit the prop firm and screw over the trader? Well, this is one of the rare instances where I actually believe the new rule benefits the trader, and no other prop firms that I've seen calculates this way. So this is unique to Blusky. Now you can pause the video and read this yourself, but basically these are the maximum profits you should aim for to stay within the consistency rule. But any profits over this amount will be added to your profit target rather than a multiplicative calculation. They give you an example here, but let me try to explain this a little bit better for you. Okay, so let me show you the math on how this new calculation benefits the trader. In our example, assume we have a 50K account, meaning our profit target is $3,000, and with a 30% consistency rule, the most we should make per day is $900. You get this amount by multiplying the 3,000 by 30% or 0.3. So the perfect scenario, you make $900, nothing happens, the profit goal stays at 3,000. 3,000 minus the $900 in profits on the day gives you 2,100 remaining to hit your profit goal. Now suppose you went over by $100. You make $1,000 profit on the day. This is how every other firm calculates your new profit goal. This $1,000 must be 30% of your total profits, aka your new profit goal. So the new profit goal times 30% or 0.3 gives you $3,333.33. For simplicity's sake, I'll round this up to $33.34. So this will be your new profit goal. $33.34 minus $1,000 profit on the day will give you the remaining amount you need to hit. Compared to the perfect scenario, this is $234 more. Now with Blue Sky, same scenario, you make $1,000 on the day, which is in excess of $100. For them, you just add this excess amount to the profit goal to get your new profit goal. So $100 plus $3,000 gives you $3,100 for your new profit goal. You take this, subtract $1,000 profit to get $2,100 remaining. This is exactly the same as the perfect scenario. Essentially, any excess amount is nullified towards the remaining profit goal amount. So suppose you went over by a lot and you made $1,900 profit on the day. Of course, you don't want to go over, you want to stay under $900 if you can. But hypothetically, if you have an excess of $1,000, 1,000 plus 3,000 will give you $4,000 as your new profit goal. $4,000 minus the $1,900 will still give you $2,100 as the remaining amount you need to make. Again, the same as the perfect scenario. Now, if this happens with any other firm where you go over by $1,000 and make $1,900 on the day, that $1,900 must be 30% of your total profits. So your new profit goal using their calculations will be $6,334. I'm rounding up. And if you subtract the profits from that, you get $4,434 as the remaining amount you need to make, over doubling the perfect scenario. Of course, this is an extreme example, but this is to illustrate how Blue Sky does not punish you like other firms for going over the optimal scenario in order to meet their consistency rule. I hope this helped clear it up for you, but if you're still confused, let me know in the comments. Now going back real quick, there are a few more rules, but these won't fail your account. No trading news events. They don't give you specifics, but I assume it's going to be the typical high impact news like CPI, FOMC, and NFP, and probably 2 minutes before and after these events. Next, don't go over your maximum contracts. They have procedures put in place to prevent you from doing this, but if you figure out some way to get around it, they punish you by restarting your account or denying you a brokerage account, so just make sure you stay within your contract limits. Lastly, make sure you close your trades before market close, before 5 p.m. New York time. In fact, you'll probably want to close your positions even earlier because 15 minutes before market close, they can automatically close you out, and that's something you probably don't want. As far as platforms go, you can use either Tradeovate or Rhythmic. And here you can see you can have up to 2 accounts, except if you go for the 100K account, you're only allowed 1, and you're not allowed to use any trade copiers either. And here are the countries that are not supported due to brokerage limitations. They also have a futures economic calendar that looks pretty cool. It's laid out in a calendar format with high impact news. It's free, so you can use this if you like this kind of style. So once you pass the evaluation phase, you move to a Blue Live account. Like other prop firms, this is still a simulated account. Even though it's called the earning phase, you can't actually take a payout until you hit the profit goal. And that sounds bad, but it's pretty much the same as other prop firms that make you build a buffer before you can take payouts. The profit goal is the same as the evaluation phase, except the 100K account is better with it being $2,500 less. Also, the daily loss limit, consistency rule, and minimum trading days are removed, so you don't have to worry about those anymore. You just need to concern yourself with the trailing drawdown. Now, once you hit the profit goal in the Blue Live account, you get a brokerage account with a starting balance equal to that profit goal. And the thing that should jump out to you right away is the minimum balance on the account. For most firms, this is $0, meaning you can't go below the initial account balance. But Blusky imposes a much higher minimum balance, and this amount is not available to the trader. This is the #1 biggest negative for Blusky. Even though they have relatively low upfront costs, once you get to a brokerage account, they snatch away $300 or $1,000 from the profits you made trading the Blue Live account. So they could end up being the most expensive prop firm if you look at it this way. Now there is a workaround. They say, quote, if you continue to trade with us and withdraw consistently, it would be available to you if you close your account down the road. Now, how far down the road? What exactly do they mean by consistent? They don't really spell out the details, but they do say that on their website. Also, at this point, you'll have to start paying for the data, which is going to be $135 per exchange. If you got to the brokerage account, I would recommend you consider taking out a small payout just to pay yourself and cover up any evaluation costs you put into it. But remember to keep in mind your buffer. Also, the profit split is 90-10, so make sure you also account for that as well. Okay, so let's take a look at how Blusky compares to other prop firms. For the profit to drawdown ratio, the 25K and the 50K accounts are better than average, with the average being around 2. However, the 100K is worse, making it more difficult to pass. Now going to the costs. They don't have an activation fee, so they are relatively cheap, but we just talked about how the minimum account balance takes out a large chunk of your profits once you reach the brokerage account. So I added a new row in my spreadsheet where I take the true cost of funding, assuming no resets, and added the minimum account balance. I don't know what to call this, maybe your true value cost or something, but anyways, you can see this is the highest for Blusky among all these prop firms, and by a significant amount. At this point, just seeing this, personally, it almost doesn't matter what they have to offer. I wouldn't think it's worth it, I would be checked out. But that's just me. You can go with them if you don't mind the minimum account balance and only care about the upfront costs. And also note there is a way to get your first month refunded, and if you trade long term with consistency, you can get access to that minimum account balance later down the road. Moving on, in terms of rules, nothing exceptional stands out. I don't like the 8 trading days. I don't like the consistency rule, but at least they are better if you go over the optimal profits on the day. No trading news. They didn't mention anything about automated trading, but I would assume they will have the same stance as all the other firms and not allow it. Trade copier is okay unless you opt for the 100K account. For payouts, they're pretty good. 90-10 split, no minimum trading days, and they don't limit you on how much or how little you can request. I mean, there is a minimum, but it's not a lot. I don't really have anything to complain about here. So that's my rundown, guys. Blusky is on the cheaper side up front, but because of the minimum account balance, I would consider them to be the most expensive prop firm. Personally, they would not be my choice, especially for the 50K and 100K accounts. I do not like the minimum balance for these two. If anything, I would consider the 25K since it has one of the best profit to drawdown ratio. I think for the future, I will keep the 25K on my spreadsheet just as a reminder that they do have this option, but I'm not going to be using it to compare to the other prop firms. That will just be here as a reminder. But the static accounts will go away. Anyways, that's all for me. I hope you've enjoyed my coverage on Blusky and that you got something out of it. Make sure to subscribe so you don't miss out on the next prop firm that I cover, and hit that like button for the YouTube algorithm. And until next time, guys, safe trading.